Welcome back to the channel, everyone. Today I want to go through the many catalysts coming up next week for AMC. There's a lot to go through today, so be sure to stay tuned and let's make some money. But before I dive into the video, I just want to give a massive shout out to everybody that's part of the team in the private Discord, and a massive specific shout out to NorCal Bucks, who won the $600 giveaway. In the private Discord, I give everybody updated news, due diligence and information about AMC, other stocks and cryptocurrencies as well. So if you want all of that, then be sure to check out the link down in the description below to the private Discord. And now I want to dive straight in with the key information. So, a look ahead for GameStop and AMC next week, a week of margin requirement changes and other news. Hello Motos, today's look ahead should be back to its more readily digestible size rather than the monster recaps and look aheads I've put out recently. If you want to check out some of this guy's other due diligence posts, then be sure to check out Mac Attack on Reddit and his Twitter and his YouTube. ETF stuff. On Tuesday, AMC goes from the MSCI Microcap to the MSCI Midcap. This means the Microcap and all funds that track it will sell their shares in AMC. Conversely, the Midcap and all funds that track that will buy AMC shares. This will give us an overall net buy, much like when GameStop moved from the Russell 2000 to the Russell 1000. It will add value, but it won't necessarily be the mother of all short squeezes trigger, just a nice added bonus. There has also been unverified reports of AMC's weighting with the Russell 2000 changing. Given today I've seen 3 different figures and nothing official from Russells themselves or for any other channel, I'm not reporting any of those figures. I'm marking this as speculative good news at best and outright misinformation at worst. As such, I will take a watching brief on this point for now. Obviously, a lot of those ETFs like the Russell 2000 rebalance their position holdings every few weeks or every few months or maybe even every day. Therefore, as some stocks grow and shrink in market cap, the Russell 2000 will change their holdings of shares to reflect the portion distribution. For example, let's say specifically that the Russell 2000 wants to hold 8% of their ETF in AMC stock, but because AMC went up 20% over the last week, maybe it's now 10% of their entire ETF, and therefore the Russell 2000 might need to sell some shares of AMC, or maybe they need to buy some more. Margin requirement changes. These all kick in on either Wednesday and Friday. 3 things. First, the way margin requirements are calculated is changing. This should favour higher collateral needed or more margin calls, which is on Wednesday. Secondly, the amount required as a liquid deposit is increasing from $10,000 to $250,000. What a lot of apes are missing is this isn't necessarily per entity, this is per account. So say if BlackRock or Citadel has 20 accounts, their margin requirement goes from $200,000 for all 20 accounts to $5 million for all 20 accounts. And there's been some reports of Citadel having up to 2,000 offshore accounts, so therefore their margin requirements could go up significantly, 2,000 times $250,000 to be specific. So it's a big difference. It won't necessarily cause more margin calls, but it will mean that some funds either have to sell assets to pony up the cash or lock away from the readily available cash. This is on Friday. Basically, some funds may need to cover their shorts in AMC just to free up additional cash to make those margin requirements, or maybe sell off some of their long positions again to make the margin requirements. Thirdly and finally, a reminder has gone out that certain types of assets can't be included as collateral, one of which is bonds purchased through reverse repos. The actual wording doesn't state this, but the way it's worded means these will be included. To be specific, of that $250,000, only actual cash can be used to meet that $250,000 requirement. They can't give bonds or promissory notes or anything like that. It has to be tangible cash, not necessarily notes and coins, but you get the picture. This means that for any entities near to a margin call, they'll either have to sell assets to get more cash or start facing more margin calls. Again, this is on Wednesday. Next up on the list is the end of the eviction moratorium. This is one that's a bit sad. On the one hand, it will lead to a downturn in the market, which makes the mother of all short squeezes triggering more likely. On the other hand, it means that people are going to be losing their homes and places of safety and everything that comes with that. Obviously, it's never ever good that people that have lost their jobs and their income are now going to be evicted and potentially end up homeless. Yes, it may cause the mother of all short squeezes, but at the end of the day, humanity is more important than a short squeeze, and I think everybody should remember that at the bottom of their hearts. This is why after the short squeeze, I'm going to be doing absolutely everything I can to give back more to my local community and also to different charities around the world. This won't be an overnight thing, but the ripple effect will lead to lower house prices and, more importantly for us, lower asset balances for the financial entities that bought those said houses. Nothing will happen overnight, but this is bullish long term for us. Just remember, don't dance, and that's a quote from The Big Short. It's going to be expensive for renters to leave their homes and also very expensive for landlords to evict tenants, and that's effectively going to drain cash out of the economy that could be going back in to stimulate the economy and could be going into consumer spending. It means that landlords are going to have less money to pay their mortgages with and therefore less money also to spend at shops and to continue improving the US economy. We've also got the GameStop earnings release. A bit further ahead than next week, we have GameStop's earnings release on the 8th of September. Almost always on all earnings for GameStop and AMC, we've seen buy the rumour and sell the news. So expect some upwards movement, independent of other factors, from now until the earnings. GameStop NFT, still awaiting with eager breath the NFT announcement. My gut tells me if they've not announced it now, and with earnings so close, that they'll hold off on any announcement until earnings at the earliest. It may come later. Speculation is still abound as to what NFT may hold. I'm still hoping for the second-hand digital resale blockchain. We've then got September 17th deep out of the money puts looming, an additional option chain analysis and a disclaimer. Creand and Macattack have both put out due diligence about these deep in the money puts and their purpose. I actually explained these deep out the money puts in a separate video a few days ago, and these deep out the money puts are being specifically used to hide legit short interest, not cover legit short interest, just hide it. Effectively, a hedge fund that currently has a short position takes out a call option and exercises it, uses those shares to cover the actual short position that they have, the legal short position, and then it also takes out a far out the money put to effectively replicate that short position that they once had. As we approach the large block of September 17th options, the price is going to get more volatile. This is largely due to the fact that a single move up or down will have a chain effect of hedging and de-hedging that will cause the price to become more volatile. As I started saying last week, I didn't think I was going to be right, but still gave my price predictions and logic. Turns out I got pretty close. That being said, this week, and indeed every week until the week ending September 17th has passed, is going to be more and more difficult to predict using my style of analysis. This is the reason I say to get multiple sources for both information and predictions. It's also why predictions shouldn't focus on when the mother of all short squeezes and how much the mother of all short squeezes will go, but again, this is just my opinion. Stay on the micro scale in terms of price movements and dates. And this is why I don't like giving specific price predictions and specific date predictions, because we all know the MOAS is going to happen, it's just a case of when. And at the end of the day, no one can predict the future with 100% accuracy. If they can, I'd probably be pretty worried, and I'd probably say it was just a very good guess. Yes, you can use things like TA or option theory or cycle theory, but at the end of the day, AMC is being manipulated. Therefore, anything like TA that's based off historical events can't necessarily be used 100% accurately because they can just manipulate anything the way they want it. As his standard options disclaimer, he says, I use options as part of my analysis and predictions. I don't condemn or encourage buying options. They are high risk, high reward. I don't have any personally, as I don't have the bankroll to back buying them in a way that would be an investment opposed to just a gamble. You're an adult, do your own research on them and see if buying them versus shares is right for you. Personally, I buy and hold shares and use the chain for insight. And I personally prefer buying shares as well, because at the end of the day, shares don't expire. Yes, options can be good if you know something is going to happen that week or next week and you're 100% certain it's going to happen, but in this squeeze play, nothing can be 100% certain. Final note on options. Retail is not the one doing the bulk of buying and selling of the call and put contracts. At the time of writing this, there was 141 million shares of AMC represented in calls both in and out of the money. So as requested, I'll start putting the options figures for this week so apes can see what I mean by relative to previous or upcoming weeks. Currently there's 24,000 calls in the money and there was only 15,000 calls last week. Currently there's 75,000 calls out of the money and there was 83,000 last week. That is bullish because there's more calls in the money and less calls out of the money. A great start. There's 7,000 puts in the money and 15,000 last week. There's also 68,000 puts out of the money and only 51,000 last week, which again is bullish as well because there's less puts in the money and more puts out of the money. Again, overall very good. As we can see, roughly the same open interest. More calls and less puts are starting in the money, meaning some hedging will have gone in favour of the call side. For calls, we've got decent open interest at $80, $50 and $40. $80 normally would be a total YOLO play with no hedging. However, due to the increased volatility and September 17th looming, there will be some hedging going on. We've got a nice solid ramp built from $35 to $52, and after that we're patchy from $52 to $80. All in all, I wouldn't take much to reinforce. For puts, we've got a decent open interest at $30, $29 and $25. There's a slide all the way down to $10. However, the ones at the lower end won't be hedged for and won't have been bought for the purpose of putting downward pressure on AMC, but as a way to shift short interest into fail to delivers, or swap fail to delivers from one short hedge fund to another. He then also gives his predictions that I don't specifically want to cover because again, I don't like giving specific price or date predictions. And finally, I've got some great news for AMC in the long term, which is that movies aren't dead. Spider-Man trailer breaks the world record for most views in 24 hours on YouTube. Therefore, it's very, very evident that the movies and AMC as a cinema chain is still very, very important to the world as a whole. Clearly, a lot of people want to watch the new Spider-Man. I imagine there'll be an exclusivity deal and it will be specifically in theatres for a period of time before it's available on streaming platforms. Therefore, we could potentially see a giant box office breaking record for AMC theatres in the not too distant future. Guys, be sure to let me know down in the comments below what you think about the upcoming catalysts for next week. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!